And we're live. Welcome back to another weekly Gimbal update. I'm Amanda, and we've got Keith Tyner here, Debbie Cash, and Doug Shreve. I'm going to start us off with some disclaimers while some of you guys are still hopping on. Content provided at this event is for general information only and not intended to provide specific advice or recommendations for any individual. Any performance reference is historical and no guarantee of future results. All indices are unmanaged and may not be invested into directly. Any economic forecast set forth during the event may not develop as predicted, and there can be no guarantee that any strategy will be successful. These thoughts and opinions are those of Gimbal Financial and do not reflect the views of LPL Financial. Securities offered through LPL Financial are a member of FINRA and SIPC. Investment advice offered through Gimbal Financial, a registered investment advisor and separate entity from LPL. That should do it.
Nice work.
Amanda, have you ever thought about doing used car commercials where they do the disclaimer at the end of the radio announcement?
No, and after you mentioned that last week, I'm overcoming one of my fears of reading in front of people as well. So that does not seem to be something that I should pursue in my future.
I'm not helping you.
I hated that in elementary school when they made you read aloud. Oh, that was horrible. Doug, what's going on out there?
We've had a short week in the markets this week. With Monday being Memorial Day, it's been a good week. I was looking at some numbers, and just to recap some numbers for the month of May, the S&P 500 is up 4%. That's the best since May of 2007. The NASDAQ was up 5%, but the real winner were the small caps. And on this show, we've talked about the small caps several times now. Small caps were up 6.9%, which if you look at year-to-date stuff, year-to-date performances, the S&P 500 is still down 6%. The NASDAQ's up 4%, but the small caps are down 16%. And so even with a really amazing May for the small caps, they're still down pretty big year to date. So there's some opportunity there perhaps.
Hey, Doug.
Yeah.
Is a small cap something that your boys wear compared to the thing you throw on your mug, or what is a small cap?
You tell me.
I'm going to, Debbie, I don't know if we introduced you. I'm going to let you go to an attendee unless you got something new we need to know. And then, are you good, Debbie?
So. I'm good.
Any
Bye.
words of wisdom for everybody? Should we have our tomatoes planted now, or what do we need to do?
Yes, you should have your tomatoes planted.
All right. Ours are
Oh, there
right
they are.
by
And there they
Douglas.
are.
All right, Debbie, tell us how we did.
You did good.
Bye.
Small caps, the word cap is short for capitalization, and all capitalization is a fancy word at how a business is financed. Is it financed with borrowing money or selling ownership to people? And usually they are talking about the ownership portion of it when they talk about capitalization, but the cap structure of a business is both the ownership and the loans that are outstanding. So small companies, when they talk small caps, those are really big companies. They're huge companies compared to the Gimbal Financials of the world. So go ahead. I'm sorry.
No, that's a good word. That's a good word to remember, that the small caps are still huge. Yeah, they would make a difference in a local economy, especially. I want to go ahead and share my screen with you guys. Let's see here. We'll take a look at the markets together. And I think we always start off with the NASDAQ. Let's do that again. Okay, here we go. So got some feedback from our call last week, and wanted just to reiterate what all these lines mean. And feel free, Keith, to weigh in and simplify this a little more. But basically what we're looking at is the markets. And when we say the markets, we like to look at the NASDAQ, which is basically a collection of 3,000 plus stocks. It's going to include a lot of technology. It's going to include some healthcare and biotech. It's really the emerging stocks that are out there. And we'll talk about the S&P 500, which is your blue chip stocks. It's your household names. It's 500 stocks that make up the S&P 500. The Dow Jones, we don't talk about that much. The Dow Jones is an interesting index. It's basically just 30 stocks. And so when you hear on the nightly news or wherever you log in, Yahoo Finance, whatever, and you see the Dow Jones move this or that, that's really just a collection of 30 stocks. That's it. And so we like to broaden that out a little bit. Looking at the NASDAQ today, this is the chart of the NASDAQ. As you can see, it's had just an amazing recovery since the low of the market. And the low of the market would have taken place right here, 6,631, and that was on March 23rd. And so we're a couple months past that, and it's just, the NASDAQ's just been looking great. It's well ahead of its moving averages, and these moving averages, the ones that we like to follow, this black line, if you can see the thin black line, that's its 200-day moving average. Red line coming down and going back up, that's the 50-day moving average. And so before we get too excited about buying anything, normally we like to see prices above those lines. That gives us a little more confidence that the big players are in, and the big players being institutions. It could be a mutual fund that you like, or it could be like the Harvard endowment. But the big players, the big institutions are normally in when we're above that 200-day or 50-day moving average. So the NASDAQ has had a good week so far. We've had 2 up days, 1 down day. And the down day wasn't too bad. As you can see, we didn't really cross through the lows. Keith, you want to talk about volume down here? Explain what we've got going on with volume?
Yeah, I think even I'll throw another kind of a little bit of information out there is that when you say a 200-day moving average, that's 200 business days. So that's going to approximate going closer to a year. That's what the stock market has done for the last year, roughly, or the 90 days, roughly, the last 3 months, roughly. And so that you don't get all excited on the day-to-day moves. And so you can kind of see the trend of things right here. The volume is, I'm thinking Beanie Babies or tulip rushes. Like there was a period 20 years ago where Beanie Babies were the rage, and I don't even remember what the big Beanie Babies were, but the prices of some of those things shot up over $100 or something like that. And it was because there were a lot of buyers that wanted them, and they were buying them faster than the Thai company, I think that's who it was, could produce those. And so the volume tells you a lot about supply and demand, and you can see right to the left of that V shape in the NASDAQ there, when you look down at the volume, you can see that big people, big institutions were in a crowded movie theater there and were trying to get out of it. They were hearing fire and they were running to the door. And those were indications that caused us to kind of take some of the risk out of some of the portfolios out there. That was a substantial increase in the volume, and then it started drying up, and the market's rallied back, the NASDAQ there, on lesser volume than on the sell side of it. But yeah, the volume gives you a good indication. If you show up at a restaurant and nobody else is there in a normal economy, that might tell you something, right? It's the same thing with paying attention to the volume in the markets. If there's some cars in the parking lot, it might be a safe place to eat.
Yeah, that's a great distinction. Boy, look at the picture of this. So you'll see where my cursor is, you'll see a red line, and that's the average volume. And so what Keith's saying is really before this low, you see a lot of traffic. There was a lot of activity, a lot of sellers. The red lines are the sellers. And then if you come over here to where things have picked up, yeah, we haven't really traded above volume or above average volume for quite some time. Let's switch gears real quick and look at the S&P 500, see how it's done this week. Okay, so you guys are all becoming Gimbal finance students here. You see the S&P 500 has had a great week. We popped above the 200-day moving average. And that's been really great. We've been looking for this to happen for quite some time, and it finally did it. And so it didn't quite have that V-shaped recovery like the NASDAQ did, but it's been moving in the right direction. And again, a really strong month in May helped us get there. So we started to get a little more confidence in the broad depth of the overall stock market. There are so many more stocks today that are looking good compared to just the technology stocks within the last 2 months. Anything on this one, Keith, before I switch to the small companies?
Yeah, I think that we mentioned last week and a number of weeks coming up to that we were looking for that 200-day number. And if you look to the left over there, and I mention this pretty regularly every week, that 200-day, that black line acts as a floor all the way over to the far left where it's 27, 28, I think. The market was staying above that level. It bounced up, dropped back down to the 28, 22 level, then down to the 28, 55 level. It just kept staying above that. And my concern with the overall market has been, will it get through that and not act as a ceiling to us? And so I think the next few weeks will kind of give us an indication whether this 3,000 level is going to hold in the market. And ideally it will. Ideally that will happen. And then were you going to go over the S&P 600 real quick, Doug?
Yeah, let's do. Yeah, so this is the S&P 600, the small cap stocks that we were talking about. It's a universe of 600 small cap stocks. And as you can see, it's trading below its 200-day moving average. And it's been there. It's been there for a while, whereas this is a completely different picture than the NASDAQ. And so when you might hear the stock market's hitting new highs, hey, that's in the eye of the beholder. The news, they could be choosing just to look at the NASDAQ. But keep in mind, there are several stocks that are not hitting their new highs, and they've got a ways to go. And so we've been encouraged to see the small companies start to rebound and start to trade even above their 50-day moving average.
I think this is a really strong week for the small stocks. I'd really like to see it finish today strong as well. That 810 level on it there to the left a little bit was kind of a concern whether it's going to be able to hold that. But I think it'll be interesting to watch. I know for our business, Gimbal has been able to adapt to this economy much faster than bigger businesses because our telephone technology, our ability to respond to our clients, some of the bigger suppliers we use can't adapt as quickly as we have. And so we'll see how these small companies are able to adapt.
Yeah, so good week overall in the stock market, good month. There is all different types of strategies on how to invest money. And one of the sayings that I've heard in the market in the last 20 years is sell in May and go away. And in this May, I don't know that you want to do that. You want to just keep your eyes open, allow the market to speak to you, learn from it. There might be times where you have more cash this summer. There may be times where you're more heavily invested, but that's what we're going to do here is we're going to just keep listening to the market and every week give you a report on what we're learning. So if you have some questions, specific questions about the market or stocks, or we talked a little bit about exchange traded funds last week. If you have specific questions on those, always just feel free to reach out to us. What else is going on, Amanda? What's going on in your world?
I know we're talking a lot about the new office, but Doug's outside in front of our tiny house and Keith is inside, so you guys can get a good view of what we're working on here. And where Keith was last week is the state of our other office right now. But we're hoping to have that done in the next few months. And we are excited to have you guys out for some kind of cookout. We're in the early stages of planning, but we'd love everyone to kind of have an all-day opportunity to come say hi, check out the new space. And that's really all I got. It's going to be fun. I don't know anything about it. We'll have a date for you when we got one, but yeah, early stages of that.
I'm looking forward to that. We've done so many fun client events together in the last 20 years and just can't wait to build some more memories together. And it'll start with kicking off the new office space. What you got going on, Keith?
Got a number of things, so I'll go quickly here. I want to just show you a couple more things on the market and then jump into some things. I watch this, they call this the VIX index. I watch this to see where the market is, and that shows you the risk essentially that's in the market, how volatile the market is. And we've just come through a horrendous time here. And I like it when we get more normalized like we are over to the left here. And so right now the VIX is working its way back down to a normalized time, but we're seeing every day the markets shift quite a bit. And so they're still a lot more volatile than what I prefer, but we're getting there. We're working our way gradually. It's going to, hopefully this thing will flatten out a little bit as well. And then in our latest version of the anchor, I think I talked about it last week a little bit, is pay attention to stocks you may have inherited or things of that nature. And I'm just pulling up a random stock. I didn't pull this one up before we started, so I don't even know what it really looks like. I haven't looked at it in months, but this was the company to work for when I graduated from college. IBM, Big Blue. If you can see this, if you had inherited this stock, it doesn't really look that good, does it? Like it's paid dividends, but those can be deceiving sometime. And so what we can do, if you've inherited some stocks, we can look at those things and help you think through a long-term strategy with those things. This is a monthly chart of IBM stock. So again, I didn't pull this up before today. This blue line right up here at the top tells you the relative strength of that stock compared to the market. You generally want to see this line going up like it did right here back in the, can't see, I don't know how to move this thing. Back at right around 2006, 7, and 8, it started going up and peaked out in 2011. But what this line tells me is, as an investor, relative to this black line, the S&P 500, for the last almost decade, you would have been better off not having individual stock risk, but having your money invested in the S&P 500, and it's a more diversified thing. So even though you may know the name of a stock, it may not be a safe place to have your wealth, and we're happy to do reviews of those things for you. The non-market oriented things, I got a bunch of twos for you, and I'll try to make these as quickly as possible. I've got one of my concerns in the marketplace, and when this is over on our Facebook, there'll be a post that I wrote about it. It'll show up around the time this is over, about money and having too much money and the problem with that. And I quoted in there, you guys are cooler than me. What is it? The notorious BIG or something, more money, more problems. And that's one of the storms I see out there, is if you look at what is going on with the Federal Reserve and the amount of money that's being created right now, it's going to force all of us as investors to pay close attention, particularly to the investments we've called safe investments over time, which would be your savings account, your certificates of deposits, your U.S. Treasuries. Because if you look at a chart of what's going on with the money supply, it's shooting straight up, which means that it tends to mean that's going to be an inflationary thing. And that's different than what happened in 2007 and 2008. All that money the Federal Reserve created in 2007, 2008, they put in like a safe. It never really hit the economy. They're just throwing money into the economy, and it's pushing prices up. So you want to pay attention to that.
Hey, Keith, when you say money's being created, like, explain that a little more.
No, I'm not going to do that. You'll have to watch the video on Facebook. I I used, I think from Khan Academy, I used them to explain it because they're more efficient when they're words. So if you want to better understand it, go watch that. It'll be quicker use of your time. My second thing is I was taking Doug's advice and cleaning out stuff. So I got an offer today, an offer you can't resist. I got 2 books that I'm willing to send out. They're books I like. They've lasted on my shelf. This
That one's a
by,
good one. That one's one of my favorites. The
Kevin
Red Rubber
Carroll.
Ball. I love that book.
The Rules of the Red Rubber Ball. Awesome book. First person to reply to Amanda or Debbie, there's Amanda's email. We'll mail this out to you. Harry Lorraine, one of the coolest cats ever. Working on your memory is a good thing at all times, particularly as you get old like me. You want to do exercises. And Harry Lorraine's memory, what's it, a page a minute memory book. So these 2 I'll send out. That's 2 things there for you. You just got to get us an indication you have an interest in it. And then the last thing I got is 2 different things. And this is a big deal, I think, is opinions. Right? And what I know is as an investor, you can hire a financial advisor. Every financial advisor has an opinion, right? Like if we didn't have an opinion, there would be no cause to hire us. And one of the subtle secrets is that we're wrong sometimes. And delegating to somebody who's wrong is really hard. And so that tells me that we appreciate your trust in us, because really the idea that you're wrong is hard to accept by most people. Most people will never say, I was wrong. But to be wrong and to admit it allows you to be right more than you're wrong. And so on the very essence of looking at these stock charts, that there's really 2 decisions we make. Do we buy or do we sell this thing? I mean, hold is part of the buy decision, but to sell something is really difficult for us because it's what really points out when we're wrong. What do you think, Doug?
It's so true. It is so true, especially with stocks and investments. We want to be wrong quick. We don't want to be wrong long. But yeah, thanks everybody for your trust and for the feedback that you give us, and for the opportunity to serve you with your investments. It really is a joy to do it. And I'm going to continue Keith's path.
I have one more thing. I want to say a thank you for I've already gotten 3 responses for those books, so roll them in.
I thought you were going to say we've gotten 3 responses on how we're wrong all the time.
Those will come later, I'm sure.
I want to continue Keith's theme. It's amazing sometimes. We don't talk a lot about, hey, Keith, what are you talking about? Amanda, what are you talking? And so it's really fun when things sync up. And I want to share with everybody on the call about a Zoom call I had this week. And it's with an author. And, the only way that we're going to learn and keep learning is either through friendships or books we read, maybe a podcast, but it's all relationships. And I had the opportunity to get on a podcast with an author this week and just be reminded of a couple key things in life. This guy's name is John Eldredge. And John, he's written a couple really influential books for me, but I want to encourage everybody with just a few things. One, there is a war for your attention right now.
What was that?
There is a war for your attention. Oh, I got to loosen up. Man, I'm going to go in there and punch him. So there's a war for your attention right now. There are so many things that are trying to grab your attention. And I noticed this past week, I've got Facebook, I've got Instagram, and some of you know I'm quitting things on Thursdays. And so last Thursday, my brother and I decided to quit Instagram. I'm not saying you need to quit Instagram, but for me, I had to quit it. It was taking too much of my time, and I started to notice that my attention span, isn't what it used to be. And that's because of all this stuff trying to demand my time. And so I want to encourage you guys with this. Knowing that there is a war for your attention, this is going to be a great weekend to get outside in Indiana. I don't know where you are. I know we've had some people from San Diego get on this call. If our San Diego friends on this call, it's always a great time to get outside for you. But this is going to be a great weekend to just sit back and say, where's my attention going? And if I look back from the start of 2020, am I happy with how I'm spending my time? What's this coronavirus meant to me as an individual? I can tell you from a father's point of view, this has been the best time of my life. We haven't had the distractions of sports and extracurricular activities. Those are great. We're going to go back to them. We want our kids to leave the house to develop. But it's been great because we haven't been distracted by some of the things that have distracted us over the past couple of years. We've really been able to enjoy each other. And so I'm curious what it is for you. If you could take this weekend and just look back and say, in 2020, what has taken my attention? Where's my attention going? Where's my focus? Am I more available or less available? Am I more like dead set opinionated in my beliefs, or am I more open-minded? And I think you can do that this weekend by simply getting outdoors. I'm outdoors right now and loving it. Thank you for a place where I can work. I can get on this computer outdoors and breathe the air, look at these great pine trees right in front of me. And it just does a lot for your soul. And so I want to encourage you with that, just to pay attention to where your time is going. And if there's something in your life that you need to separate from, I want to encourage you to, with benevolence, detach from it. Not out of anger, not out of frustration, not out of because you've wanted to do it but just couldn't, but just benevolently. Just say, hey, in the most kind way, I'm not doing that anymore. I'm leaving that in the dust. And I think what you'll find is you'll find some freedoms in your life that you just haven't had in months. And it could free you up to read that new book that Keith just gave you. So John Eldridge, I want to thank him for his Zoom podcast this week. It was the best part of my week. And I just want to share that with you. Anything else, guys?
Doug, thanks for that. I would appreciate any input that you guys might have on our Anchor newsletter, any thoughts that you'd like us to elaborate on. We're kind of just listening to conversations that people give us as we put new ideas in there on a monthly basis. But I think I would close out with kind of reiterating what Doug is saying, is the idea of your attention is a big deal. It's a big deal to social media. It's that's why they put red flashing things on the screen. And I studied this idea a few months back, and the phrase pay attention struck me because the word pay means to give somebody something, right? That you're turning, like if I pay for lunch, I'm giving them my credit card or money. And so when you pay attention to somebody, you're giving them the most valuable asset you have is time and your respect. And so when you pay attention to something, it's a huge, huge deal. So we are grateful that you would pay attention to us for these short minutes this morning, but we hope your weekend is a spectacular one, and we're just honored to serve you.
I got one more story. This is from one of you. This was a big encouragement along this subject. One of you just bought a really sweet new car. When I saw it, I fell in love with your car. It is so cool. And what you did is you allowed your daughter, who just got her driver's license, to take it out. And I think what you did by doing that is you said, look, I'm paying attention to you. You are more important than my car. And that's the kind of rich stuff that I think you'll find just through relationship that will make your weekend just the best weekend you've had in a long time. So anyway, thanks for sharing your stories with us.
Hey, Doug, my last thing, and I'll hit the end button, is I shared my uncle's car was parked out here, a sweet Cadillac, with my daughter a while ago. In mid recording of this, she called me because she got pulled over. So I got to pay attention to her. You guys all have a great weekend, and we'll see you soon.
Take care.